Welcome to Armand Academy. Like and subscribe for more content and drop your doubts in the comments. Share with your friends and classmates. For private tuition in these subjects across all boards and universities, contact me here or the link in the description. Let's get started. Sunrise Limited acquired assets of 3,60,000 and took over creditors of 1 lakh from Moonlight Limited for an agreed purchase consideration of 4,80,000. Sunrise Limited issued 9% debentures of 100 each at a discount of 4% in satisfaction of the purchase consideration, as journal entries in the books of Sunrise Limited. Okay, and this is a fairly straightforward sum. If your basics of journal entry is strong, golden rules are strong, it's easy. Okay, we debit what comes in, we take over creditors have liabilities, we credit. Okay, and the difference, okay, obviously we credit Moonlight, but for the amount of purchase consideration. All right, so we don't have to bother with the date column. Assets are coming in, assets have debit balance. Okay, so we simply say sundry assets because we don't know what those assets are. Sundry assets account is anyhow debited. But before I go further, I need to decide whether we are dealing with goodwill or capital reserve. Okay, and I'm going to do that calculation. I'm going to squeeze in that calculation over here. You should do it in a working note. Okay, our first step is to calculate what is called net assets. And the net assets is equal to the assets that we're taking over, which is 3,60,000 minus the liability that we're taking over, which is 1 lakh. So we are taking over something valued at 2,60,000, but yet we are, okay, is it anything else we're missing out? 3,60,000 minus 1 lakh is 2,60,000, yet the purchase consideration is 4,80,000. Okay, so what's happening when the purchase consideration is more than the net assets, then what we are talking about is goodwill, which is going to be the difference between the two. So I can take, okay, my goodwill. Okay, remember, all this has to be in your working notes. Don't do it like this. Okay, you can't do anything in your question paper to begin with. All right, this has to be in a working note below the journal. Goodwill is equal to the purchase consideration of 4,80,000 minus the net assets of 2,60,000, and that should give me 2,20,000 as goodwill. All right, why am I doing that? Because I need to know now only whether I have to debit goodwill or credit capital reserve in case it was the other way around. So goodwill account is going to be debited. By the way, assets, I know how much it is, 3,60,000. Goodwill, we just calculated 2,20,000. Credit your liabilities which you're taking over. So creditors account is going to be credited to creditors account. How much are the creditors for? Okay, 1 lakh. So on the credit side, 1 lakh, and to the vendor, the person we are taking it over from. All right, and that is Moonlight Limited. Moonlight Limited, and that we know how much is the purchase consideration, 4,80,000. 4,80,000. Okay, and notice how the credit is equal to the debit, so you know you're right. All right, so being assets acquired and liabilities taken over from Moonlight Limited. Being assets acquired and liabilities taken over from Moonlight Limited. Okay, Light Limited. and we draw a line like this for neatness. Okay, it's expected. You should do it. Now, the next journal entry is when we are satisfying the purchase consideration and they're telling us we issued 9% debentures of 100 each at a discount of 4%. Now, how much I need to pay the person? I need to pay the purchase consideration, which is 4 lakh 80. And I am giving away debentures of 100 each at a discount. So I need to know the number of debentures. I mean, it works for any securities, but since it's debentures, number of debentures issued will be equal to the purchase consideration upon issue price per debenture in our case. Okay, so the purchase consideration I know is 4,80,000. And the issue price per debenture, see, they're telling us that the face value, okay, that the face value is 100 and a discount of 4. So that is 96. That is 96. Okay, and that's it. No 1,000, just 96. So if I have to solve this, what do I do? 48 ones are, 48 twos are, 2 ones are, 2 fives are. I'm going to end up with 5,000 debentures. So if I'm going to give away 5,000 debentures, right, of how much? Of 100 each. So my debenture, okay, how many percentage debentures? 9%. My 9% debentures is going to be 5,000 into 100, which is 5 lakh. My discount on issue of debentures, my discount is going to be 5,000 into 4, which is the discount per debenture, okay, which is 20,000. And that's it. That's all I need to know. I am settling the purchase consideration. I'm giving Moonlight something. Okay, debit the receiver. Moonlight is getting debentures. Debit the receiver. Then we are giving these debentures at a discount. Debit all expenses and losses. So discount on issue of, okay, debentures. Discount on issue of debentures account is also going to be debited. And then we credit what goes out. And what is going out are the 9%, 9% debentures. So 9% debentures. All right. And I've already done the calculations. First of all, Moonlight Limited has to be paid 4 lakh 80. We're giving them 4 lakh 80 in terms of discounted debentures. How much is the discount on debentures? 20,000. How much is the value of debentures? 5 lakhs. I'm just going to fill it up. 20,000 over here, 5 lakhs over here. Okay. What we have is debit the receiver, debit all expenses and losses, and credit what goes out. Okay. And being purchase consideration settled, being purchase consideration settled. Okay, and you can give some details by issuing 5,000 9% debentures at 4% discount. Okay, and remember to draw a line. With that, we are done with this question. Any doubts, feel free to ask.